Welcome back to Mediaweek. Well, we were hearing earlier about two events from two of the free-to-air commercial TV networks held this week. And of course, the media buyers were there in attendance. James Manning, our co-host, here with us. And James, obviously the media buyers keenly wanting to see what the network's offerings are for next year. What did they think?
It's really hard to gauge it straight away at an event because everyone's quite positive and that it all looks good and shiny up on the big screen, and they really need to go away and then match it up with what the competition's offering. So, you know, people are a bit reticent, a bit guarded about about really forecasting how people are going to go next year.
Sure, okay. And of course, you chatted to the Group M CEO and Chairman John Steadman a little earlier. Here's that interview.
John Steadman, we're in sort of upfront month. All the free-to-air networks are getting around, showing us their wares.
They are.
Do you get much of a feel for the what a network will do next year at these events?
It gives you an indication of their program lineup, their formats for forthcoming year, and it gives you sort of a good feeling as to what they're going to be doing. But obviously, as the year goes on, you get obviously with the numbers coming out, you get a better feeling for it.
Yeah, you've been to a few of these things. The confidence that the sort of sales team exude, does that sort of tip you off to sort of how strong the programming can be?
Oh, obviously they're singing the praises of their own product. This morning I saw Channel 10, and I thought, I think if they can deliver on consistency and stability, as they said, they may have an opportunity of clawing their way back, but it's going to take time. It's important that from their perspective they live by that sort of promise and don't chop and change their schedules like they have been, and running repeats when they're running first runs in the same week. So they're the sort of things I think they need to sort of focus on in terms of delivery to. They've got the product there, but it's a matter of getting back to, I guess, their core audience, which is the under 40s.
10 were almost underselling it in a way, weren't they? They didn't make any rash promises. They were just talking about getting a bit of momentum back.
Yes,
could you see some shows there that could get them some more eyeballs?
Yeah, I think so. There's a couple of the MasterChef professionals I think will do well, and there's a couple of new Australian dramas that they're looking to bring back in, and Australian dramas on the whole work pretty well in this marketplace for obvious reasons. So, if they get it right, it obviously depends what they're up against as to whether they're going to perform or not in the end.
10 started with their 10 Connect, their group offering this morning. We heard a bit from 7 last week about theirs. And 9 are still selling powered, despite sort of the magazines sitting outside the ownership group. How big a part of the business are they?
Multi-platform deals are a very important part of clients' schedules these days, and obviously 9 and 7 have got, I guess, a lot better offering across different platforms than 10, so they've got a bit of work there to do, 10, I think, in that respect.
Sure. 10 talked a little bit about going outside their group. Is that unusual to bring in people that not sort of financially connected with the offering?
In terms of what?
Yeah, well, they said bring in third parties, in media players.
Oh, as in like Nova, for example? Or?
Yeah.
If they can, I think if they're going to compete on the same platform as 9 and 7, they have to.
Sure.
Really.
Yes,
as a group.
Yeah. The year has ended up, it's sort of a battle between 7 and 9. Do you think either of them, could improve much, or should they both be happy with what they've achieved?
I think they'd be pretty happy with what they've achieved to date. Obviously, they've won audience from 10, given their problems that they've had this year. I think 7 has a consistent product that they'll continue to deliver on going into the new year. And I think 9 has shown their wares this year and should continue with that drive going into 2013.
Well, Fairfax CEO Greg Hywood has told the company's AGM this week that there's been a slight improvement in revenue since August, but it is still down compared with the same time last year. There was also an olive branch to the biggest shareholder, Gina Reinhardt, too, as the board tried to provide answers to investors angry over the record lows in the share price. Well, let's get some details from our co-host James Manning. And James, it was actually something else that was revealed ahead of the AGM that was quite interesting. The revelation that the board actually did consider a breakup of the company. Yeah,
it was a busy week for Greg Hywood. The day before he was at a city sort of media analyst day, and he talked about that the breakup had been looked at and the numbers just didn't work. Of course, they were prepared to get rid of the radio. They thought they could live without that, but the rest of the group, they really need all those things to sort of maximise the returns from advertisers and their customers.
All right, let's also get, of course, the analysts and the share market's view on this story. Chris Weston joining us from IG in Melbourne now. Chris, great to see you. Yeah, I guess this is a bit of a home and away interview. Let's start with the home stuff first. And obviously, two of the beaten up stocks that have been in focus for various reasons are Fairfax and 10, both again in the news this week. So how have they performed?
Yeah, well, Fairfax done very well. It's up 8% on the day of the AGM. I think, again, both these stocks have got a lot of people who've been betting on share price declines, i.e. they've gone short. So it's not particularly hard to move share prices higher. I think what's interesting today after the big spike up we saw yesterday is that Fairfax's shares are still flat. So we haven't seen this all-out liquidation of initial profit taking coming through. I think the market likes the fact, they talked about the breakup, the market likes the fact that the pace of revenue declines is falling. The cost base it seems on track, and those cost base should decline about 5%. And I think if you believe that they're going to hit their earnings, the stock's trading on 5.6 times forward earnings, which on any metric is ridiculously cheap. So I think if you believe in that, then this is one for the very, very brave, but for the longer term. 10 on the other hand, not so great. Look, I think the price of iCorp 110 is still an okay number. It's obviously not as good as the 145 which was previously agreed, but this is in line with in terms of valuations of other deals. So I think 110 is great. It relieves, if it does go through, it relieves and certainly helps them out with their debt covenants, the net interest covenants as well. So it's interesting to see that the share price has actually gone backwards since this announcement. It's slightly down.
And just turning to, I guess, the away news, and obviously quarterly earnings have been in focus in the US, but looking at Facebook and Netflix, Facebook certainly a standout reaction there.
Yeah, I mean, the stock up 19%. I mean, there's a lot of people who've just been expecting this stock to continue declining, and they've just absolutely delivered. They've delivered on revenue. The revenue number's up 32% above the expectations. You're seeing a situation where advertising spend on the company is significant. And the area of major concern, obviously, everyone was saying, can they monetize the mobile side of things? The revenue there from the advertising made up about 14% of their total revenue. So, a lot of people have been speculating they just couldn't do this. They're making things work. The fears of the overhang perhaps will abate, and I think this stock could be a good buying at these levels if this trend continues. Netflix, not so good, very different story, down 12%. I mean, they missed in loads of different key departments, and I just can't really see a huge investment case for this at the moment.
Chris, great to get that analysis. Thanks so much.
Cheers.
Let's just turn to some other news, well, particularly in the print space, in the publishing sector, and that's obviously that sad news that The Week is going to be no longer. It's ended its run in Australia after 4 years, James.
Righty, look, last issue, collector's item number 199. They didn't quite make it to 200. David Salter, the first editor-in-chief, was a regular guest on our show in the early days of the magazine. Look, it's hard to keep a news weekly going. We're seeing Newsweek in the US has abandoned their print, or they will be soon, going to the web only, but they've given up the ghost completely on this one in Australia. No internet presence either, all hard copy. Still a very successful magazine in the UK and America, but they've actually called in the administrators here. I think first creditors meetings are next Monday.
I'm just looking at a big argument between the Australian and the AFR too this week over who's got the bigger online audience. Yeah, the AFR came out and said, look, our online numbers are surging, which is correct, and they said, look, we're actually have bigger audience now overall than the Australian. The Australian said, hold on a minute, you're comparing your total audience to only our business audience. So the Australians' overall online audience is a lot bigger than the AFR, but the AFR does beat its business section. And how could we forget the big news too of the week, the announcement of the mini iPad from Apple? Yeah, look, amazing, isn't it? They just keep going. 100 million iPads they revealed this week, so it's a lot out there. And look, a lot of publishers are hoping that the money they're investing on apps and stuff like that for converting some of their readers to tablets will work, and Apple still, I think 90% of all tablet web traffic is via iPad. So if you do get into that, publishers getting into that tablet space, you've still got to focus on your iPad app to start with. Obviously, there's been a lot of focus on the commercial free-to-air TV networks, but Foxtel out this week with a very big deal, taking Express to the US to the next level, and a new deal with HBO. Yeah, I'm not sure if it's exclusive, but they get a first look at a lot of their content, and that's things like
Boardwalk Empire and a Game of Thrones will be going to Showcase, which is now a Foxtel-owned channel after they took over those movie channels. And then some of the classic HBO series like 6 Feet Under, The Sopranos will be going to Soho. That we talked about that,
with the newsroom
channel. Yep, yeah, and the newsroom will stay there too, I believe.
Okay, and we've also got the Foxtel tablet app with 21 channels free for subscribers. What channels do you get?
Yeah, look, it's launching next month officially. 21, some of them will be live, some of them will be catch-up, I believe, and we think both Sky News and the Sky News Business Channel will be both on there live.
Oh, okay, interesting. Let's have a look quickly then at the ratings for week 42. Top 10 first for free to air. There you see the X Factor and also the current affair shows doing well, and just turning the page and more 7 News. And finally, subscription TV top 10 there. There's the top 5 and The Simpsons location doing well over on the second page. James, as always, thank you so much.
Thank you, Bridie.
James Manning there from Mediaweek, and that's all we've got time for. Thanks for your company.